It is my pleasure to introduce Kevin and Brandon. Kevin Collins is the Design and Construction Professional Liability Leader with Victor US. He is responsible for business development, advancing professional liability underwriting, and the continued development of market-leading products inclusive of all design and construction professional liability solutions at Victor US. Brandon Perry has over 10 years of experience assessing professional liability risk in the design industry. Currently, he is the underwriting manager for Victor's Architects and Engineers large firm program. Prior to this role, he acted in a product development and management capacity, which included responsibility for the development of policy language and endorsement creation, coordination with insurance carrier partners, and assistance with response to regulatory inquiries. And I am Frank Musica, and I'm on the Victor Risk Management staff. This program, Evolving Insurance Supporting Advanced Practice, is the second of our three-part series on the new policy. Here are the topics this program will address. While all of these enhancements provide policyholders with coverages that they can use to their advantage in the marketplace for professional services, we will focus much of this hour-long session on the rectification expansion in the 2020 policy. We will also cover these other issues in red, these four issues. The subrogation waiver, the option of having defense coverage outside the limits, an update to our faulty workmanship exclusion, and a change in the transportation exclusion that provides you with some benefit. So let's start with a discussion of what rectification is and why this unique coverage was expanded in the policy.
Thank you, Frank, and good afternoon, good morning to everybody out there on the phone. Rectification coverage is something that we introduced originally in our 2014 policy form. It was designed initially to allow firms to bring what would be a design error to the attention of the carrier when it's discovered during construction. It doesn't require a third party to be making a claim against the insured, but is rather the insured essentially self-reporting this design error they believe will be the basis for a claim in the future. In the 2014 form, we connected the ability to make a rectification claim. In order to do it, a firm needed to be responsible for both the design and construction on the project. In the intervening time, it's become readily apparent that most A&E firms aren't in a position generally to take on both the design and construction responsibility for a project. And we've had numerous inquiries both from the brokerage side and from insureds as to whether we would be making any changes. In 2020, we have undergone a change which really makes this more accessible. But first, I think it's helpful to understand what rectification expense actually is and what's covered under the policy. You've got it up on your screens right now that rectification expense means reasonable and necessary fees, costs, and expenses incurred by the named insured for the rectification of a design defect caused by professional services. What's important there is the definition of design defect, which means a wrongful act, but with some specific carve-outs that address the fact that this is happening during construction. Rectification expense does not include overhead, markup, profit, or fee, and some of the other things at the bottom of the slide. So that's really addressing how it varies slightly from the definition of wrongful act. So under the new 2020 form, which has been filed in all jurisdictions and has been approved in a number of them, you'll find that we removed the trigger qualification that a firm be responsible for both design and construction. Now the firm, in order to make a rectification claim, does not need to be responsible for construction on a project. So what this does is really allow a firm to be aggressive in the instance that they uncover a design error during the construction process and allows them to come up with the pathway to rectify that error, report it to the carrier, have the carrier evaluate it and say, yes, we believe that would have led to a design claim. This is an appropriate design to rectify that issue, and please move ahead. It covers the reasonable and necessary fees, costs, and expenses incurred by the policyholder because of the design defect caused by professional services in any part of the construction or engineering works. The carve back again is on the bottom, but it does not covers design services, but not actual or alleged negligence in the review of shop drawings, issuance of change orders, observation of construction.
Okay, Brandon, why doesn't cover that part of it?
It's not covering that part of it because those are allegations that would be able to be brought by the contractor and would result in a standard claim.
So that would be subject to pre-claims assistance or a claim.
Correct.
Resolution.
Correct.
So most firms, I think, agree in contracts to re-perform their services if an error in their services, if negligence in their services is identified. So in a way, what this really does is allows them to take that business risk of re-performing their services and really helps to bring it into a coverage situation, right? But it's an upfront coverage situation that pays their basic expenses.
Correct. So in that way, this addresses what was formerly a business risk and provides an avenue for an insurance recovery on that business risk. To my understanding, this is a relatively unique coverage to our program, and we're happy to provide it to our policyholders.
And it would seem to be the kind of enhancement that most policyholders would see as having real value, because again, they can step up quickly, take charge of a situation, re-perform their services, and at no real loss to them, and head off the possibility of major claims later on.
Correct. And again, since we removed the requirement that they be responsible for construction, this should be a much more accessible coverage to the majority of policyholders.
I guess here's the summary of the expanded rectification, what it does for policyholders. And we wanted to make sure that those involved in this webinar had this information, and they've all been sent the handout of this information. So they have this description of what the rectification coverage does. And I think that last paragraph is very important for firms when they're marketing their services, because they can really talk about this expanded coverage, which isn't offered by other carriers, to help educate clients that the firm really is there to provide a timely and responsive project for the client.
And following on that point, there's the other bullet point on this slide that there is an avenue within the rectification coverage to provide emergency response, and that under certain circumstances, emergency response to correct a design error is also something that would be addressed by the coverage. So it's not in 100% of situations necessary for the carrier to sign off on the rectification expenses.
And that emergency response could relate to a structural deficiency or some other design defect that the firm identifies, and that could cause an immediate problem on the project, especially a problem that could have life safety aspects to it.
Right.
Okay. All right, let's move on to the waiver of insurance subrogation rights. I think this is one of the most interesting changes of the policy, because it's a complete waiver of subrogation rights if such a waiver is required by the contract. For those of you who might not understand the legal issues involved in insurance coverage, I can explain the right of subrogation in terms of footwear. Think of subrogation as the insurance carrier stepping into the shoes of the policyholder after the insurance carrier pays a claim on the policyholder's behalf. The rights of the insured firm to pursue recovery against other parties who might have some responsibility for the loss is transferred to the insurance carrier. The carrier uses its legal right to search for other responsible parties. It could recover all or part of the amount paid on behalf of the firm, thus reducing the insurance expenditure and providing a benefit to the policyholder because the paid claim is reduced as a loss attributed to the policyholder. You see this in property coverages routinely. If on a project there's a major fire loss, for example, the insurer will pay a claim and then sue absolutely anyone who might have some responsibility in some way for the loss. And that's a way for the insurance carrier to recover its payment. And that is why if you're using an AIA or an EJCDC standard professional service contract, there is in that a waiver of subrogation rights on claims paid by property insurers to keep the risk with the property insurer and not have the property insurer interrupt the project by suing everyone. So let's look at it from a professional liability perspective. Kevin, you're going to handle this one, right? Why would CNA be willing to basically surrender the rights of the insurance carrier that the insurance carrier really has is entitled to once it pays a claim on behalf of the policyholder?
Thanks, Frank. And again, good morning and good afternoon to everybody on the program as well. So building on what Frank said around waiver of subrogation, this is a contractual tool that firms can use with owners in order to get more favorable or to deal with these types of issues. So one element that's important is the blanket waiver of subrogation that we're talking about provides a limitation in the policy to say that this would apply up until the time that the claim is made. So from CNA or a carrier's perspective, this waiver of subrogation, once a claim is made against you, essentially that's not necessarily in place. Essentially, the contractual terms are defined as the means of how the claim will be interpreted and handled. We recognize with consequential damages or other aspects of a contract, owners have a strong feeling one way or another. You as a company have strong feelings one way or another to best mitigate the risk and deal effectively with that relationship. And we have found that waiver of subrogation has been one of those components. When your client, the owner, is looking for that, a mutual waiver of subrogation of claims could be an important element of efficiency in maintaining the relationship and working effectively with that client. And we have provided the waiver of subrogation over that time for an extended period of time. What we tried to address in the 2020 is a recognition that the design team is often brought under the same contractual terms. And a mechanical engineer, MEP firm, civil firm that's doing site survey work, or other specialty consultant, be it landscape architect, surveyor, management consultant, et cetera, are often hired by the lead design professional to perform that service. Prior to this extension, we had defined the waiver of subrogation as against your client. And again, recognizing the design team's need to maybe mutually agree in totality, we've modified the language to address the subconsultants working on the project that they can extend the waiver of subrogation upline to another person or organization in that situation. And in that way, whether you are the prime design professional or one of the underlying subconsultants or specialty consultants, you can have a subconsultant agreement, or the owner architect or owner engineer agreement can have the same terms at the time that the contract is signed. From a carrier standpoint, it's you're always working not only on the standard of care in the absence of a specific contract, but also working with the contractual terms of that project at the same time. So although this may have an impact as to recovery or the ability of you or the carrier, as Frank said, to look outside for other culpable parties, we recognize that to build client relationship and maintain relationships, that may be something that you want to assume as a business risk.
Okay, let's talk about the addition of a defense outside of policy limits option. With the 2020 policy change, Victor now has the ability to offer for some firms the option for those firms to have separate coverage for the defense of a claim that is not counted against the per claim limit paid for by the firm. All insurance policies have per claim and aggregate limits that are the absolute maximum the insurance policy will pay out on the policyholder's behalf. Because professional liability insurance claims can be difficult to resolve through litigation, the cost of defending a policyholder is usually included within policy limits. That could be a problem with smaller firms, certainly, because their policy limits may not be high, and the amount of cost of defending a small firm on a claim against it may be as high as defending a large firm on the same type of a claim. So this option gives firms and their insurance advisors some ideas to consider when deciding on the limit purchase for the policy term. And Kevin, would you comment?
Absolutely. Let's get started there. So obviously, a lot of the firms on the phone, you all come from a different background, be it architectural or engineering or specialty consultant, and also from a revenue size and complexity basis. There's a lot of diversity within that group as well. So I guess to level set with everybody, what we are trying to do in introducing this coverage is to increase bandwidth for firms to manage the risk. And in this case, the risk would be to a loss of the per claim or aggregate limit of a severe loss, and recognizing whether you're the subconsultant at issue with the allegation that you were negligent, or if you're the lead design professional that has vicarious responsibility for that consultant. The question is, how do you protect and mitigate the erosion of your limits? So this coverage is introduced, and actually it's a brand new coverage to the program, although I know that it's offered occasionally within other markets. It is new to our program. So this benefit aligns to the actual approval of the 2020 form. And we'll talk about it in a little bit more detail specifically, but roughly 42 of the 50 states, not including Puerto Rico and the U.S. Virgin Islands, is 2 territories that we write in, 42 have approved this. But this would be available upon approval within the state. At a bottom level, I always talk about with firms that you are the first line of defense, you in fact are the first insurance company, because in the selection of your per claim aggregate limit, you also select a deductible. And that deductible level may vary based upon your level of risk, meaning you want to have more control, take a higher deductible, because obviously higher deductible equates to lower premium on an equal basis, and lower premium equates to a lower deductible equates to a higher premium in that position. So for firms under $1 million, as it says here, we're adding the benefit of how do you protect the per claim aggregate limit that applies to potential indemnity due to a negligence-based claim that's found against you. And so what this does is provides an additional tower of costs specific to claims expenses. Could be legal costs if you have an attorney involved, outside consultants, or people coming in to investigate the claim, et cetera. That would be eroded first before tapping into the per claim and aggregate limit that you have under your base policy. For firms that carry $1 million in per claim limit or less, this would be a tool that would be available to you to help protect that purchase limit more effectively as you have requirements with other contracts. This is for an additional premium cost. So similar to the variance on deductible we talked about, this would be a separate endorsement that could be attached to your policy for an additional premium. And again, as the 2020 form is approved, you can have that conversation with your broker and the underwriter as to whether or not that opportunity or if that is something that you'd like to look at more specifically.
Kevin, one of the interactions of this is with the fact that the policy has no hammer clause in it, because many insurance companies put a hammer clause in their contract, which really is an effort to force a firm to settle. And if there's no hammer clause and a firm is not forced to settle, it could be running up much higher defense costs. Would you explain what a hammer clause is and why it's not in our policy and how this might interact with it?
Yeah, so if you're looking in your policy under conditions hammer, you won't find it under the policy, but the concept is similar from the standpoint of a standard policy that has this type of clause says that to the extent that you have a claim under the policy which can be resolved for a specified amount, and the insured decides that they do not wish to settle on that behalf and want the insurance company to continue to defend, the hammer clause allows the issuing insurance company to cap the level of claim that they would pay for that, the amount that they would pay for that specific claim to the extent that they continue to defend and the resolution actually is higher than that amount which would have been settled under the policy. From our standpoint, now being a part of a program and partner with CNA for close to 63 years, it's a lot of experience, both on the claim side and the underwriting side. And what we found is communication and good claims handling with a client helps to mitigate a lot of the issues that I think other carriers may have with the use of that clause. So we removed it several iterations ago, recognizing that good claims handling, communication with the claims specialist in the unit allows us to, make the point on situations where perhaps settlement is appropriate to the account versus continuing to defend in the best way to resolve the action. And over the decade and a half plus that since we've removed that clause, that's kind of bared out both in our claims experience and with feedback from clients on the level of claims handling on an individual basis.
All right, thank you. So let's talk about the exclusion of faulty workmanship provision in the policy. One aspect of a standard professional liability insurance policy is that it covers services and not workmanship. As firms expand what they do for clients, the narrow definition of faulty workmanship can cause confusion. In general, the CNA professional liability policy provides coverage for liability that you have due to negligent professional services. And the faulty workmanship exclusion really excludes coverage for construction-related activities. But in some cases, there could be some friction between those two. So, Brandon, would you explain a little bit about why this change was made and
Sure.
the benefit of it?
Sure. Thanks, Frank. So to be clear, as Frank was mentioning, in order for the policy to provide coverage, the triggering act still has to be a third party alleging a wrongful act took place, and that has to arise out of the professional services provided by the firm. To that extent, however, that we've recognized that certain specialties within our program often provide services or oversee services or hire subs that provide services that would traditionally be considered contracting or fall under this workmanship exclusion. And we wanted to be explicitly clear, and you can see in the underlined wording at the bottom, we wanted to be explicitly clear that we would not exclude an otherwise covered claim for professional services because these contracting services had also been provided by the insured or by their subcontractor. Specifically, we had in mind the application of this exclusion to geotechnical firms with material testing exposure, as well as interior designers who commonly are providing these extra services. From a functional standpoint, this was not an exclusion that CNA was invoking to otherwise exclude covered professional claims, but we wanted to be explicitly clear and also show that we're keeping up with the changes in practice and really how the firms are retaining subconsultants or packaging together services and contracting work.
Yeah, I think this slide really helps you understand that the benefits. It's really to keep the possibility of that exclusion from being triggered in situations where we would not want it to be triggered, but simply because of the way insurance language is constructed, there might be that possibility. So there really follows the practice that the CNA program has had for years in really supporting the professional activities of firms we insure.
One thing that I would add into that is, although we've had a very strong comfort level with firms taking on a design construction exposure in a design build format or otherwise, I think broadly in the marketplace, other markets have not been that way. And as such, you start to get questions around utilization and what construction means and how it's construed. You overlay that with maybe some expansion of geotechnical services or lab CMT, construction materials testing services that you're performing, either evaluating that as an in-house service or hiring specialty consultants to do that. So, this is also recognizing questions that we were getting that services that equated to construction services like drilling, et cetera, and we just want to add that into the definition so that you have the fact that it's not just traditional hammer and nails.
Thank you. And I want Brandon to discuss the transportation exclusion in the coverage in the professional liability insurance policy and why it was modified.
Thanks, Frank. We were noticing that the transportation exclusion, one thing that we've continuously gotten as a question has really been, well, what if I use a drone to perform my professional services? What if I use an aircraft to do photogrammetry work? Is that professional service now not covered? And essentially with the carve back to the exclusion, what we're saying is the tool that you use to perform your professional services is not going to be used as a reason why those professional services are not now covered. So really what we see is in the instance that you're using an automobile or an aircraft, which drones fit the definition of that, watercraft, rolling stock, if you're doing marine surveying or something along those lines, we're not going to use the fact that you were in a boat when you did the marine surveying as a reason why we would not cover otherwise the surveying services you're providing. So again, this is another one of the wording additions that went in to reinforce existing practice for how CNA has handled these types of claims. It's not something that we've generally seen the claims professionals exclude, but it's really a clarification so that firms that are utilizing things like drones especially have an additional level of comfort in using that tool to provide their professional services. And this is really a case of us adapting as federal regulation addresses what exactly drones are, and firms find it increasing and interesting ways to use them.
This does not extend the coverage of the policy to those risks involved in the actual use of the drone, right? It's
right.
Just, it makes sure that we're covering the professional services that are generated when using the drone. So if that drone, for instance, crashes into someone's house and causes damage, that's not a professional liability coverage. That's your aircraft coverage that you have to have, right?
Correct. What we would be saying essentially is that if you have a camera mounted on a drone to do an inspection and there's an error in the inspection, something that you didn't catch or didn't otherwise make apparent, we will cover that as a professional service, the missed point on the inspection. But if the drone crashes into the smokestack and knocks it over, that is not something that's going to be considered a professional service.
Right. So if you're doing a bridge inspection, for instance, and you give the drone the wrong information of what to look at, or the drone provides you with a visual image of what you wanted it to, and you either misdirected the drone or you misinterpreted the image, those are professional services that would be covered by the policy.
Correct. And there's still the idea that you, as a professional, need to select the correct tool to do the inspection to the level or degree that's been expected. So The use of drones is one of those things that is impacted by changing standards of care for what is required for an inspection. So that's still a point to bear in mind as firms start to use this. So the coverage is there, but the standard of care might be changing.
Yeah, I think firms always have to be aware of their business risks and cover their exposures through appropriate insurance products or contractual indemnity provisions. Many policies are needed to cover differing exposures. If you're hiring a drone operator to provide you with that information, again, you could be liable if you misinterpret the information or even misdirect what information is provided to you. But if you're hiring someone else to operate the drone, you better make sure that other party has the kind of aircraft coverage for the drone so that if there is damage or if there's invasion of privacy or if there's any other risks that could come from just the operation of the drone, that subconsultant has the proper coverage in place. Okay, one thing Kevin mentioned earlier, and we probably should update is where we are and how states are approaching this. I think a lot of our policyholders do not understand that insurance is controlled by state insurance commissions and not a national standard. And in our program, I think we seek approval in 53 jurisdictions now?
Correct.
And changes in policy language often have to go through a cumbersome, at times, very long process of being approved jurisdiction by jurisdiction. So, Kevin, where are we in the ability to provide enhanced coverage for our policyholders?
Right. So as Brandon mentioned early in the presentation, we have filed this new policy form within all the jurisdictions that we write, which would be the 50 states, District of Columbia, Puerto Rico, and the U.S. Virgin Islands. And we're currently approved in 42 jurisdictions. Another aspect of that is that we are filed as an admitted program. And so as an admitted program, we are subject to review within that state and the guidelines of the specific state insurance commissioner. So for some states, that allows for an easy review process and approval. In others, that requires not only prior approval, but a more lengthy process. As we started this filing, essentially around late April and early May, we were in much the condition that we are now. So we anticipated perhaps a little bit more of time, not knowing individual insurance departments' ability to review and respond as they have in the past. So we were expecting that it would take longer maybe than it has with other filings. But, to our surprise, as we're now 4-5 months down the road, we have received favorable responses in 42 jurisdictions. And so with the approval in your state, we will be able to update your insurance broker. I know we have access to that on the website, and we'll be able to show that for you in just a minute. But recognize that these coverages that we're talking about would be part of your policy as the states approved it. Now, an interesting piece within the insurance policy is what's called a liberalization clause. Because the luck of the draw, right, is sometimes you decide to purchase the policy on August 1st, and the state comes back on the 5th and says, okay, we're going to approve these new coverages, and your policy is issued using the policy form that was in place as of August 1st, not August 5th. So that's what the liberalization clause within our policy is looking to address. And that is that if you have a current policy with us, and in the middle of that policy term, recognizing that policy periods are 12 months, but if your state approves the updated coverages midterm, then any claim made on or after that approval date by the state would be considered utilizing the expanded coverages in that piece. So that will allow you potentially to get the broader coverages as soon as the state approves those changes.
And that is the situation in every state, right? So
Correct.
every state that approves it, the liberalization clause kicks in and we provide the enhanced coverage.
Correct.
Right.
State could always come back and say, no, we don't agree with that, but that's not been our experience, nor would we anticipate that.
Well, it would seem that in the case of a state saying you cannot provide broader coverage is something that does not benefit the
Exactly.
policyholders in that state. So, and that means that whatever policy you have in your file right now may count, but once that state says the new enhanced provisions can be used, the CNA claims people are going to apply the better terms to your claims rather than what's in your policy.
Correct. You know, Frank, another question that we get that may be just a benefit to share is, you know, we have a multitude of different programs within the architects and engineers program. So it's not only architectural firms and the engineering classes, but we also provide coverage for land surveyors, landscape architects, interior designers, construction managers, and other management consultants and environmental consultants as well. So just to reinforce that the filing that we did in each one of these states, each one of those programs and each one of those firms would benefit from the extended coverage. So if you're in our program specializing in land surveying, and that's the program that you're in, these coverages apply to that as well. And that's also beneficial for firms that act as an architect engineer in a primary capacity, that if you do work with consultants like landscape architects and land surveyors that are insured in our program, then you'll be able to know that there's a benefit of equal policy coverage under the policy.
So your sub-consultants would have the better coverage and you would benefit from that.
Correct.
All right, let's talk a little bit about our website and our blog. You know, we do have information in our blog and on our website about the coverage enhancements. The blog has looked at each of these items and provides more information on each of these items. So please go to the blog if you want more information. The website has the article, the publication visible on the right about the 2020 policy changes and goes into detail about each of the policy changes. On that same page of the school risk management, you can get information on which states have approved, and that's updated as each approval comes in. I should also mention that the blog provides the industry with additional information, valuable practice management information. In fact, starting on February 5th, we did our first COVID-19 related blog post, and I think since that time have put in, I think, 37 different blog posts about what to do about the new normal of practicing in a COVID-19 situation. And if you haven't...
I apologize, just to interrupt you 1 minute. On the screenshot last, we talked about the 2020 changes, not to toot Frank's horn, but to toot Frank's horn for just a minute. Frank and the team put together an additional listing of the 2020 policy changes that were other changes included in the policy, and specifically talking about some of the changes that we made as part of our 2014 policy modifications. And that's important because we do have a few states that talked to you about admitted program and pre-approval by the state or the insurance department. We had a few states that did not approve the 2014 form that now have approved the 2020, most recently Pennsylvania. For those that are based in Pennsylvania, you would have been coming off of our 2005 insuring agreement and are now benefiting from the 2020. So rectification in this case is not an expansion for you, but a new coverage. So Frank and his team put together also the changes from the 2014 form, which is a great reminder for folks of the extension of coverages that we applied, or for some states, it would be seen as new coverage because you'll see that for the first time under your policy. So thanks, Frank, for putting that together.
Yeah, the 2014 policy, I really think has helped firms in international practice and other areas. And our third webinar will actually look at a few of those carryover provisions, which are new for people in some states, but certainly provide a benefit for everyone who's a policyholder. Now, this is the school risk management website, and please go to the website for more information. That block on the lower right, the one that says news and events, has the first in this three-part series of webinars on the new policy enhancements on it. To record it, that's where this recording will go. And so please go to that and you can get more information on the new policy as well as some other webinars that we've done. The continuing education part, on which is the lower left, has a number of webinars and other programs that do provide continuing education credit. So if you're a policyholder, make sure you sign up for that, because you can not only increase the risk management knowledge in your firm, but you can obtain professional continuing education credits on professional liability and risk management there as well. Now, we do have a few questions, and one of the questions that came in was to ask a little bit more about the waiver of subrogation, and specifically that the waiver of subrogation is so broad that it's also against subconsultants. And the question is, doesn't that reduce the ability of a prime to recover from a subconsultant if the prime's contract is a standard contract that also waives subrogation rights against the subconsultant? Doesn't that put the prime at greater risk for the negligence of the subconsultant, or how does CNA handle a situation like that?
So it's really just focused on subrogation rights. In other words, looking out for other culpable parties that may have interacted in that allegation of negligence or the cause of loss there. So it's really aligning to the contract, which could be a benefit because everybody's under the same terms. If the subconsulting agreement is by definition bringing in the prime consulting agreement or specifically has that language there. So it actually affects it equally. Because if, for instance, a property loss, there's an allegation of electrical wiring or design that caused the fire, and in actuality, the one of the tenants of the building committed an error that may have cut the wire or done some other thing in that piece, that could be a culpable party to recover the loss to make the owner whole, the loss payee whole in that process. But the contract requirements would preclude them or CNA from trying to recover from that outside source. So in situations where waiver of subrogation is equally applied between the subconsultant and the consultant, then equally you wouldn't be able to go against to recover from those outside parties, which may increase the claim to the prime designer or the subconsultant in some capacity, because prime consultants always have vicarious liability to those that they hire. So it doesn't change that environment, and a lack of waiver of subrogation may have, allowed you to go to that third-party source to help mitigate that piece. But that's why, one, you can't change waiver of subrogation or commit to that once the claim is made, but you do have that ability in contract. So I think that's something that every firm should be thinking about internally as to how important waiver of subrogation is to their management of business and who they hire to. I think we have found it to become more prevalent that, if owners are requiring that, you try to get a mutual waiver, and, you want to align the contract equally to the subconsultants. Because much like in the expansion of this, the subconsultant's client was the architect or engineer as the prime and not ultimately the owner. So this gives flexibility to extend upline, but also reinforces the importance of evaluating that risk management business risk that they have and making the best decision for them on every project.
All right. And we do have a question on the rectification, just to clarify that it does cover the actual policyholder's personnel time to redesign, right? I mean, that's really what it's covering. So when the firm recognizes that it has made a mistake, recognizes that the design may be deficient in some way, that it was negligent in its original design, and redesigns to bring it up to a quality standard that's appropriate, the rectification coverage is really covering the personnel time, not markups, not profit, not additional profit, because the firm should have made that on its original design, but just the personnel time of the people in the firm, correct?
Correct, and I think that's actually in the definition of expenses there for rectification, is that it doesn't include overhead, markup, profit, fee, or expenses incurred by the policyholder for materials supplied. So really, it is just for the design services of the policyholder required to rectify the design error.
Okay, and we do have another question of defense outside the limits, and this is one that I think maybe I can answer. The question is, what percentage of time or what percentage of situations is it that defense costs really do erode the limits in a way that the firm would be at risk for its own assets? And I think what we've seen is that certainly with larger firms, that doesn't happen very often, even though they may have higher defense costs and higher claims in general, because they have higher limits, the erosion of the limits doesn't reach a high percentage of their aggregate limit or their per claim limit. I think we do see that more with smaller firms, especially smaller firms that are adamant in not wanting to settle. But I think the percentage of time is not that high that it reaches a point where it's eroding the limits significantly. But having defense coverage outside your limits does provide you with another way to manage your exposure and to manage the amount of money you're paying for your insurance coverage. And any other comments on the defense outside the limits part?
Well, I will say that for smaller firms, it certainly creates an option and maybe a level of comfort at perhaps purchasing a lower limit of liability or staying at a lower limit of liability, knowing that they've got additional money in the defense outside the limits to address defense costs.
And it helps them in selling that lower limit to their client. Their client, if it's a sophisticated client, that client may very well say, well, wait a minute, if you're trying to fight this off and you're eroding the limits, I mean, there may not be anything there for me to recover to solve the problem that you've caused. So in the negotiation of the contract, being able to say, no, my defense is outside the limits should be a good marketing tactic for smaller firms.
And certainly for larger firms, when they're evaluating their sub-consultants, that's going to become a question that you would want to ask when you're qualifying firms' limits.
Okay, sounds good. Gentlemen, do you have any other comments that you would like to add to this program?
Frank, I think there was one more question there.
Let's see if we can find rectification coverage.
Is it that one right there?
Yeah.
Yeah. So maybe, I guess the question, Frank, if I read it correctly, is looking at rectification coverage, if it's not covering expenses of the policyholder, how is it dealing with? And from my standpoint, I kind of think about it as there's been two essentially situations that have traditionally come up in insurance. One is what we utilize for the free pre-claims assistance, right? You've got a circumstance, you've got an itchy feeling in the back of your head, you've got that Friday morning meeting with the owner and the project that's not going well. So you don't have a demand for money or services, but you know that things aren't going appropriately. Free pre-claims assistance gives you the avenue to consult with CNA claims and talk through and see if there needs to be an attorney brought with you to the meeting, if there's other investigation or things that you can do to help prevent you from ultimately getting into the claim. But free pre-claims assistance is there to deal with costs and conversation prior to the claim being made. What we're saying with rectification is there's still a benefit to the owner and to you to mitigate the risk, resolve the situation when identified as a problem, and trying to move on with the project effectively. So in a design build or design and construction setting, you own the project, and therefore this gives you an avenue to go to CNA on a first party basis to say, I've got an identified problem that I need to resolve. Can I do that and use my insurance proceeds to help rectify the situation at issue so I can continue on with the project? With the expansion of rectification, removing design and construction, we know that as an architect engineer in a design bid build contract, one is you don't have the authority to direct work or control of the contractor. And in fact, your avenue of dealing with, to send them the letter and have the conversation on that problem, which in turn may give you a claim where they're demanding either money or services to rectify that situation. And again, coverage under the policy for claims is there, and that would be based upon the allegation of the owner as to everything that they're covering, whether it's their expenses or other aspects. So again, this third avenue is just another way to provide rectification to the actual design error at hand, trying to get the project resolved for that issue so that it can continue on and be resolved in that process, and doesn't involve the owner from the standpoint of a claim or a lawsuit or other aspects. So thinking about it in that way, it's just a bandwidth or an avenue for solution where the only thing that you're trying to solve is the actual design error.
All right. Well, on behalf of Kevin and Brandon, I thank you for your attention and remind you that if you want the 1 hour of continuing education credit, look for and answer the survey that will be coming your way. And if you want to listen to this webinar in the future, or go back and listen to the first webinar in this series, please go to our website under News and Events, and you can listen to it there. And we will be announcing the timing for the third webinar in this series shortly. And again, thank you.